On red days like today, the most natural thing for people to do is run away. After all, we're taught in the real world, if you see a red sign, hey, you need to stop. We are taught that we can only go on the green light. What if I told you the financial markets, you must invert your thinking. When you see red, that's the time to get excited. Moreover, it's the time to apply Rule 252. That is, prepared and not scared. I'm going to dive deeply into this specific rule today. It literally has the power to transform your thinking and your profitability. If you want to succeed in financial markets, you must understand Rule 252. Let's run the numbers. Financial markets are incredibly volatile. That volatility is required to make returns. Positive volatility we don't mind. When the trade or the investment is moving in your direction, it's like heaven on earth. But when that volatility turns around to the opposite side, that's like hell. This is why we have Rule 252 from the masterclass. Prepared and not scared. There's a lot to the rule being prepared and not scared. If you were driving and you saw a red light, what would you do? Of course you say, Ken, it's a no-brainer. I would stop my car. What if you saw a green light when you're driving? Of course, another no-brainer. You would just go through that intersection. Financial markets are actually the opposite of what we experience in the real world. Professionals actually buy on red and they sell on green. Professional traders and investors know that they need to unwire the logic of the real world when it comes to applying it to financial markets. In financial markets, red means go. Green means something other than that. Buy on red, sell on green. In fact, as a professional, we buy on red and we sell on green. Retail buys on green and sells on red. It's a completely normal thought process for retail to apply the real world to financial markets, but it doesn't work. In fact, so many people are unprofitable inside financial markets simply because of this fact. You must invert your thinking. And unfortunately, nobody tells you that. What does inverted thinking look like? In order to prepare, you must know that the green is dangerous. And the red is actually your friend. You should get excited on the red days and scared on the green days. Rule 621, buy on red, sell on green. This is what we actually focus on as a global family. When we talk about Rule 723, master fear, what we're actually saying, in order to master fear, you must rewire how you look at financial markets. The red days are a cause for celebration because you're getting on the right side of the percentage, but you must be prepared for the red. Inside the masterclass, I share more than 30 years experience inside financial markets. We scale in on the red and scale out on the green. To be prepared and not scared, you must understand Tier 1 charts and how they move and interreact and intercorrelate with each other. I'll give you an example here. We're going to look at the DXY to explain the movement in crypto. As professionals, we stack probabilities. We understand that in order to prepare, we must comprehend what's actually going on inside the engine of global financial markets. And the DXY is incredibly powerful to look at. What we can see here in the last trading session, the DXY basically came down and then went up. How did this impact crypto? We've been witnessing a negative directional correlation between Bitcoin and also the DXY. As the DXY goes up, we would expect Bitcoin and the entire crypto market to come down, and that's actually what occurred. However, if you didn't understand the DXY chart and that the fact that the DXY is a Tier 1 chart, you wouldn't be looking. And therefore, by definition, you would not be prepared. When we look at the overlay, the DXY was coming down as Bitcoin was coming up. Notice this capitulation on the DXY and the capitulation on Bitcoin. And then what did Bitcoin start to do as the DXY started to come up? The Bitcoin, the entire crypto industry started to come down. Knowing these cross associations is vitally important if you are to be prepared. This is a facet on the diamond of Rule 252, prepared and not scared. One thing to note, without understanding market structure, you will never be prepared. Market structure is part of the CTKS method. Market structure is incredibly important. There was market structure around this peak in Bitcoin's price. Market structure is very different from moving averages or recent indicative price, which basically says whatever you're looking at has existed for a couple of weeks or maybe a month. And therefore, that past analysis, that just tells you everything. Actually, as a former statistician, it tells you nothing. Except for the fact if the trend is holding or not. That's a fairly good reason to use an indicator such as a moving average. But moving averages are lagging indicators. They're not forward indicators, so you have no idea where price will go. This comes as a real shock to a lot of people because a lot of people say indicators are everything. Indicators are really good if you get the right ones. The right ones are always market structure based. There's not just one level of support and resistance inside a market. There are many. One of the most powerful ways to become prepared is to first understand CTKS structure. What I've done here is something a little different. I generally just zoom in and show you one level up and one level down. I'm going to zoom out because I think a lot of people need to know where Bitcoin can fall to, especially with the SEC starting to get fairly aggressive after its XRP loss. For example, going after Hex, Richard Hart. There is a level of support around the 28,600 mark. If we don't hold on to that market structure, we're going to drop down to a deeper level. From approximately $26,193 to $27,087. Before the CTKS method, people just focused on recent indicative price and didn't understand where the true market structure, the real support, and real resistance levels were inside the market. These real support and real resistance levels are critically important to know. This is where smart money and the algorithms will step in to either support price or push it down. And we've seen around this 31,700 mark, the market was pushed down. We've seen Bitcoin try to get up time and time again into this particular smart money sell area. And smart money sell areas are all about the sellers trying to exert negative price momentum on whatever chart you're looking at. We have not been successful doing so as yet. But things can turn around very quickly in crypto. Just be aware of these particular movements. They're always on. If there's a good piece of news, crypto can soar and it can crush through these smart money sell areas. So just something to bear in mind. But what you need to know is first, where are they? If you don't know where they are, you're not prepared. So hence, if we fall below a smart money once buy area, it turns into a smart money sell area, and the sellers exert negative pressure, price momentum, down to the next smart money buy area. Price is always ping-ponging between smart money buy areas and smart money sell areas. If we get a climactic sell down around the 24,000 mark, could be on the cards, and a absolute critical sell down to 22,200. A lot of times when people see a sell down in the market, they just think it's going to zero because they don't know where the structure is. If you know where the structure is, you're already obeying Rule 252, prepared and not scared. Of course, Bitcoin can absolutely go the other way. It is in an uptrend at the moment, as are the main markets. But we must get across this particular smart money resistance level around that 29,585. Then getting above this area, say 32,411. And then we start to encounter resistance around this $36,000 mark. This is a way of zooming out and giving you an idea of how to prepare for either upward price momentum or downward price momentum. I always say that any area below the current price is like a safety net, and they all have different strengths. A very important thing to understand: objective dynamic market structure, ODMS or CTKS structure, changes on a monthly basis. This structure will not be the same next month, And when is next month? It's UTC -4 on the close of the first trading day. That means if you're in any other country bar the US, you have to wait till the New York closes to mark up your charts for the next month using the CTKS method. Being prepared and not scared is understanding when you buy on the right side of the percentage, when you're layering into your trades and investments, and you can call it dollar cost averaging. But when you dollar cost average into your trades or investments, you should do it at market structure, or you should at least be aware of where market structure actually is. For example, if you're dollar cost averaging in here, just pretend you can't see the price to the right, but you're actually dollar cost averaging in a smart money sell area. When price goes against you, when it falls from about 31,600 down to the current price, 29,220, you're going to feel that pain because you got in at the wrong time. And that could be because you didn't know objective dynamic market structure or CTKS structure. It really makes a difference. In order to be prepared and not scared, you must understand where smart money is buying and selling. Here we see total crypto market capitalization. Total has been marked up since 2014. This is no recent indicative price analysis here. And we've seen the crypto market has been trying as many times as it can to get across this $1.153 trillion market-wide resistance. It's currently failed. It doesn't mean that it can't come back and blow through it. This is always on the cards, and it's part of our three-dimensional risk management. That's another way that you get prepared. What we always know, if it doesn't get through, it's probably coming back to the one below in order to gain strength to reassert itself again. And we can see the total crypto market cap is currently selling down. The level of support underneath is 1.127 trillion. What you will find, this particular pattern will be playing out on the alts. When you look beyond this particular spike down to past price action that is around this particular area for your alts, that's how you apply total crypto market cap to your beloved charts. This is also a facet of the prepared and not scared, Rule 252. You have to know how the interdependencies of different charts are playing out on each other. That's what professionals call stacking probabilities. In order to apply Rule 252, prepared and not scared, you need to understand how everything interrelates and cross-correlates. As the DXY spiked up, what happened to Bitcoin? It came down. And of course, total is coming down at the moment. This is exerting negative price momentum across the entire crypto market. What does that mean we do? A lot of people within the retail mindset, they see red and they run. After all, it's a stoplight. You know from when you drive a car, you're not going to run that red light. The police will come after you. But inside financial markets, you must run the red light. The red light is something to get excited about. The green is something to be concerned about. It's absolutely the opposite thing of what people actually are taught to understand. Another way to get prepared is to understand directional correlation. If we look at SHIB is green, Bitcoin is red. Oh, Ken, you must be wrong. Because if Bitcoin goes down, it's negative, SHIB should also be negative. One way to prepare is to understand how this all actually plays out. We can see total crypto market cap doing this. Let's overlay SHIB. We can see when total crypto market cap came down, the alt couldn't escape that gravity. It took a while for it to come back up. But what happened when total started to sell down? SHIB also started to sell down. You can see why understanding Bitcoin and total, the DXY, and then of course you need to understand the US 2-year, the US 10-year yields, also junk bonds, the currencies, the market indices. There's so many things to understand, but it's worth it because you're putting your hard-earned money on the line. Directional correlation is therefore really, really important to understand. This is why it's critically important to keep your eye on Bitcoin and also total, and both of those are inside the service. But of course, if you've learned how to mark up the CTKS method, you can just do it yourself with your attitude of understanding red is safe, green is unsafe. With your capability to stack probabilities by looking at objective dynamic market structure and the intercorrelations between charts, you'll understand financial markets in a way few people will ever understand them. And looking at the crypto market for the past 24 hours, we can see currently ADA is down the most, 2.49%. The greatest gainers, top 100, Bitcoin Gold, Bone, DYDX, Cake, XDC, SUI, SHIB, Uni, and IMX. The greatest losers, past 24 hours, top 100, Curve, FXS, Aave, Comp, Synthetics, Stellar, Pepe, Theta, and Bitcoin Cash. Another way to prepare yourself is to understand financial markets often do the exact opposite of what people think they're going to do. We saw the Crypto Fear and Greed Index turn a little bit more optimistic. I would suggest when we get the next reading, it will be less optimistic. Personally, I've been in financial markets coming up to 4 decades. It took me a long time to understand the traffic light analogy. I always thought if the market went green, hey, get in with both feet. Wow, it's going to the moon. And early on, I always thought if it's going red, get the heck out of there. Wow, I'm going to lose money. I need to run away. Now, decades and decades later, I can share with you a very profound secret. To be successful in financial markets, you must have the opposite mentality. When it goes red, you want to run into that burning building like a firefighter. You'll need to do things that feel very uncomfortable, but please buy at spot until you know exactly what you're doing. When you know exactly what you're doing, you can do anything you want because you know the risks and you have the experience. Looking at 24-hour liquidations, we can see so many long liquidations across the board. XRP had short liquidations, outnumbering and also op. The difference here is when you see red, that's actually green. These red ones are the interesting ones. The green ones mean the price is going down. The liquidations haven't been actually that substantial, only 43.05 million in the past 24 hours. Gary Gensler from the SEC, the Securities Exchange Commission in the US, has given the green light to the EDX exchange. This is where institutional buyers can feel safe in the warm, loving embrace of the SEC, trading Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. That is the new crypto exchange EDX, backed by Schwab, Fidelity, only offering SEC-cleared assets. To apply Rule 252, prepared and not scared, that depends on Rule 240. CTKS structure first. Understanding your objective dynamic market structure is critically important. If you're putting money in as an investor or a trader, you must know where smart money is buying and selling. The service is for very busy people who don't have the time to mark up 27 particular charts each month. That is the Tier 1, Tier 2, and Tier 3 charts. You can learn how to apply the CTKS method through this Crypto Trading KS Masterclass, and let me know Barry has kindly offered a CTKS Partial Masterclass Scholarship. The link to apply for this scholarship is in the description of this video. Also, Perperatum has kindly offered another CTKS Partial Masterclass Scholarship. Another important way to be prepared and not scared to apply Rule 252 is through the CTKS Creed. These are daily positive affirmations for abundance, financial success, and happiness. Through the Creed, we understand that the universe wants us to succeed. We're not caught up in chasing money, we're caught up being the best that we can be. We know that life and opportunities reset daily. We're worthy so we can go slow to go fast. We start small and scale with Borsog, buy on red, sell on green. We know that life pullbacks give you strength for the next life rally. And the favorite part of the Creed, I am dedicated and committed. I win or learn and never blame. Blaming disempowers. Blaming costs you the lesson that you paid so dearly to learn. If I had one wish, it would be, can we get rid of blame as a default behavior inside humanity and replace it with just learning and acceptance? Because if we do that, we're going to propel ourselves forwards. Blame just keeps you stuck and keeps you angry. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.